The markets may never go down again, and some very interesting quotes attributed to Michael Bloomberg. What's up, everybody? Welcome aboard to Bubba's Day Bottom Line for Sunday. November. I'd like to be in November. How about February the 16th? February the 16th, Sunday. And of course, here we are with some interesting quotes attributed to Michael Bloomberg. I'm not going to quote him here, but I don't know how he survives what they were, whether they're real or not, and I don't know. I'm not saying. I'm just saying. You know, this is the typical BS in politics in general. Okay, but it's amazing how we see so many of the candidates right now on the left side that continue to figure out ways to screw it up, and of course they're going to keep Bernie out again. And of course, I guess the latest potential rumor is if Mr. Bloomberg survives, he will end up with Hillary Clinton as a running mate. What a team that is. But hey, listen, it is politics, and we're also the guy spend $2 billion of his own money to try to beat somebody he has no chance in beating. Okay, but hey, it's all good. It's listen, it is what it is, and of course, when you have so much, you just throw it away. And but you know what? He did earn it. I mean, he did. I don't think it's the great wealth story that we might think it is, because he got a multi-million-dollar settlement when he left Salomon Brothers. But yeah, still, he turned himself into a billionaire. Can't take that away from him. Okay. Interesting enough, another guy that I'm not a huge fan of, but Warren Buffett had a mediocre year last year, underperforming the S&P at Berkshire Hathaway for one of the few times in his history. He only made 10.9%. But again, I don't want to defend him, but I will, because again, he will not get involved in these high-tech, high plays. I mean, he might be wrong this time, but of course, if you go back and look to the 90s when he said, well, listen, don't companies still have to make money? So again, I don't typically defend him. I don't particularly care for him, but certainly, his investing ability, his ability to stay and hold within the markets, and plus the special perks he gets when companies are in trouble don't hurt him. But again, I can't say anything bad about the fact that he only did 10.9%. There's a lot of guys that did a lot worse last year, and of course that's always the story, right? You want to look to pick on somebody, who never makes money. Pick on somebody who continues to blow it. That's who you want to pick on, not a guy that's shown steady growth for 40 years, whatever it happens to be. But again, obviously we've got this coronavirus, which there's probably 4 or 5 scenarios in it, and none of them are good. I mean, there's the bad, there's the ugly, there's the worst, and then there's the even worse. And again, will it have any major effect? Well, so far, it has had no effects on the markets. Other than a couple of blips. But the market's going to have blips anyways. One of the things we always have to remember is that markets have blips anyways, regardless of what it was. It's certainly not good, but are they going to get it under control? And of course, obviously, one of the biggest issues here is the usual secrecy out of China. Again, when China reports numbers, okay, nobody knows if they're real or not. Anyways, I have written for years of the problems that lie in China between the hidden cities and other issues, but you don't get a real data from China, so we never really know. Okay, that's the bigger issue. But this virus obviously needs to be contained. It can't turn into obviously a world crisis. It could. Again, I don't. Obviously, I'm not a scientist. I'm not a doctor. I don't know anything about it. I mean, I know what it does. Obviously, I know a little bit about the virus. But when we look at it into the markets, okay, and this is something that is important to understand. In markets don't care. It's obvious that markets don't care because they've gone up. So, again, when you look into a system, a market system, okay, which is basically an auction market, okay, there's still buyers. And there will be still buyers until when? When they're not, okay? So let's not, don't kid yourself and think that you have the ability to predict the top of the market. Don't kid yourself and think that you can time this market out, okay? And anybody tells you can, they're a liar, okay? It's that simple, okay? That if somebody says that they can time this market out, they're lying, because there's no typical way to time it. Okay, again, it's going to take something, most likely some sort of event that will get the ball rolling. But so far, for the last number of years, other than the December of 18, every time it looked like it was over, okay, it immediately came back, and I think that's what we saw again. So, I think, we continue to see the action, okay, and I don't think, okay, that we have anything, yet. Now again, did I say for weeks that we're in the early stages of a recession? Yes, we are. Okay, we're seeing a slowing in manufacturing, right? But at the end of the day, again, the economy and the stock market are not related when it comes to investment and time now. Okay, this goes back to when we talk about the correlation of assets. Okay, right now the market does not care. Remember, when you force, and basically that's what's happening. If you want to return any yield on your money, you are forced into the stock market. You can go nowhere else. And it's not any stock market, it's the U.S. stock market. And it doesn't mean that some of the emerging markets are not good investments today. Okay, but again, you're seeing this massive inflow. And again, would it be from the fear of missing out? Would it be for whatever reason it wants to still go higher? So don't think that you'll see bad news, but remember that bad news only means bad news if the markets are already in trouble. Okay, so that is more the issue to watch. And what you want to watch for is when bad news actually causes the market to sell off and stay off, okay, versus a quick blip and then right back again. That's when we know. That'll tell you. So in other words, when good news happens and the markets go flat and then break, okay, and bad news happens and markets are flat or then just break, that tells you we're turning a trend. But for now, the trend is up. Okay, the trend has been up, and other than a couple of changes we've made, it hasn't changed. So don't let things, to tell you that there's things that are going to change. Okay, but now it's amazing how the market, in its minds, believe that it has immunity to any kind of risk. I mean, it is amazing. And again, these are just the warning signs when you see a market, okay? And again, it does not mean that the rally will end tomorrow. Well, it won't end tomorrow because it's President's Day. But it doesn't mean the rally is going to end anytime soon, okay? Because remember, until investors decide that it's going to change, it's not going to change. And so you will not have this change. But again, we see a much higher risk appetite in the markets. And that is usually a sign, and you tie that with what we would say, an over-exuberant consumer confidence. Now again, the consumer confidence number is always a hard number to get a read on anyways, because it's really how do they take it and who do they get it from, okay? It's the University of Michigan sentiment. So it's not a true great number, but typically, just like markets, when sentiment gets so high, Okay. And people are willing to spend so much and take on so much debt that usually ends up ugly. And again, we're not predicting anything. Okay. I'm just saying that these are things that are going to eventually can be an hour, a year. And there's no way to know which way. But again, we've got the dollar soaring, okay? And of course, everybody doesn't believe in the dollar, and yet the Fed wants a lower dollar. President Trump wants a lower dollar. Of course, that's the import-export deal. But at the end of the day, the dollar continues to make its charge towards par. And again, this is what is the dollar really? Okay, other than an asset, it is a fear asset class. So, again, I think that if you think that you can time this out based on any information that you might see, you're kidding yourself, and you will end up, okay, and eventually in the poorhouse, because that's what happens to those who believe that they are smarter than the market and can do better. It doesn't mean you can't trade better. Okay, it doesn't mean you can't call something in a short term, but I'm talking about the next macroeconomic move. Okay, cannot be timed because we don't even know yet what's going to cause it. What we do know is when it does happen, there will be tons of economists telling you, well, you see, if you go back to here, and here, which things we've already talked about, we're well ahead of what they're going to talk about when it finally happens. Okay, but we don't look backwards and tell you why it happened. We try to look forward and project, which is why we do exactly what we do. So again, it's a short week this week, okay, and there's a lot of things going on, but there's not any expectation of any real changes, and we'll get into more of that information when we come back from the break right here at Bubba's Bottom Line for Sunday, February the 16th of 2020. We'll be right back with more of Bubba's Bottom Line. So kids, we did a great webinar yesterday on our farmers hedging and protecting equities. So we've got some great in the can right now. Certainly, you got to check them out, especially if you're a farmer or a producer. It is for you. Want you to make sure you check it out. And don't forget to check out our brokerage partner at Tradier, okay? Tradier.com. And of course, if you want to get that special link for 0 commissions, all you got to do is email me at Bubba at BubbaTrading.com, and I will be happy to send you a link for free commissions. And of course, don't forget about our commodity partners over at CTG Group, okay? They handle most of our letter of direction trading and things like that. So if you'd like to check it out, just give me an email and I'll send you over a contact. You can check it out for yourself. And of course, our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with your guest, your host, me, Todd Bubba Horowitz. Welcome back. It is Bubba's Bottom Line, Todd Bubba Horowitz. It is Sunday, February the 16th, 2020. And, well, look at happy days are here again. We just keep going up, and we keep going up. And again, we had one shot, right? A couple weeks ago, we were short for a couple of days. Okay, didn't work out, and here we are long and been long again. And see, what we have to understand about the markets is the markets will go as long as they go until they don't. And I've said this many times. I say this on air now. They're going to go up until they don't go up. And whatever the reason given at the time, we know the real reasons. The real reasons are already starting to be into the markets here. Okay, but in the meantime, it's not for us to decide whether or not they're going up or down. It's for us to decide, especially if we're mechanically trading, which we are, to be with the overall trend. That's all we care about. Again, if you go back to the Turtles, if you go back to John Henry, owner of the Boston Red Sox, any major fund that was really successful was strictly a trend trader trading off the math, not off of anything else. Because again, if you try to trade the news, you lose. You have no chance to trade off this news, okay? Because again, you're about the 1 millionth person to potentially see that news when it finally comes out. So Now, we look at some of the other asset classes, and of course, gold continues to make its ascent. It obviously, certainly looks like 1,600 is the next level it's going to test. I'm pretty convinced. Again, we're long, okay, and again, it could go down, but I'm pretty convinced that you're going to see gold, at least, even if it's going lower, going to test that puke high or that panic high it made on, I think it was January the 8th, on the first report of the virus fears, I believe. Okay, we had that spike high in oil and a spike high in crude, and of course, oil has gotten cloudier, which we'll talk about in a minute. But gold continues to run, so it looks like it's going to test that. And, you know, a lot of people yell at me for saying that I'm short silver. Well, I am short silver, and I will stay short silver until it changes. But again, if you even look at the two patterns next to each other, you would be in the same position, because that's really the net direction that they're both heading right now. Gold is in a bullish formation, looking to try to go higher. Silver is in a bearish formation. Now, can we be wrong? Of course we can be wrong. Again, we don't profess that we hit 100%. We tell you that we hit 66%. That's what we tell you. Okay, so gold looks like it wants to go higher. Silver still looks like it wants to go lower, and we are long gold, short silver. Crude found a bottom, right, just under 50, which we expected. Now, I expected to go much lower. Okay, the bounce is not a surprise off of around 50, right? It came down, built some support, popped. Okay. The key here is going to be probably 54 to the upside. We said last week on our call that you could be a seller at 52 if you were really aggressive, but you might have to take some heat or wait for 54. I don't know if it'll get to 54, but again, I don't need you to be overly aggressive. Remember, when you have markets that are open 241 days a year, why should you be overly aggressive at a level unless you have some confirmation, which means that the chart's got to confirm that it actually has reached its pinnacle in that particular time, and then turn around. That's what we're looking for. Okay, bond markets, you know, they've been a little rough for us. You know, we're long bonds, which means we're short interest rate futures, which means we think interest rate, well, we don't think, but the algorithm thinks interest rates are going lower. And again, they've been fairly choppy, but they're the down end, and we're still long them. You know, again, I'm never a big fan, you know, kind of like crude oil, which I don't like to be long, but I have been when it's the right time. I don't really like being long bonds. I'd rather be short them. But again, we're long them because, again, that's what the algorithms tell us to do. And for me to decide to go against them, now again, one thing I want to remind you, as I give you the core positions, it does not mean that I do not trade the other side, like during the day when I'm doing some day trading. Okay. As we said earlier, the dollar continues to be percolating. Okay, I would not be surprised to see it hit par this week. Now, one thing that obviously I would really expect is a pullback first, because you see that chart, the dollar chart is, you know, almost parabolic, which means that trajectory cannot last much longer before it gets some sort of a pullback. What we're saying is that pattern needs to be resolved. Okay, it should resolve. If it's going to go higher, it should resolve in congestion or a slight pullback. Okay, but it can still go either way. Okay, it's just something that you have to recognize. Okay, and know that I would not be a new buyer of dollars up here, although I do think it's going higher. But I do believe there will be a better opportunity to step in and buy copper. Has been trying to surge forward. We are short copper, and of course, it could change soon. Obviously, it's been not horrible, but it's been, you know, moving up a little bit. It's really, again, a lot of these markets are churning and consolidating within ranges, which only means that they're preparing for the next big move. And typically, you would expect, okay, the next big move to be with what was the predominant trend before. But we'll see how it plays out. The grain markets, they looked a little bit better last week. You know, corn remains in consolidation. We remain short. I don't typically like being short the grains, especially at low price levels like we are. But again, I will not argue with the algorithm. I will stay with it. But again, so we're still short across the board. But soybeans, I think another rally that'll change. And soybeans are now at a very key level from, let's say $8.80 to $9. Okay. $8.90 would be better, but $8.90 to $9, and they failed last week. Right where I should have. And wheat at a very nice hold, okay, on Friday, looking like it was trying to break down and came back and held beautifully. So again, we would look and expect, okay, that wheat is probably bottomed here too. I mean, in all factual, even though I'm short all three, based on on the work I do, it looks like they should all be. I should be buying them all, okay. But again, I will buy them when it's time, okay. But I wouldn't be concerned if I was an owner right here. Certainly, if you're a farmer or producer, I would be storing. I wouldn't be selling here. Okay. The meats, cattle, we're short all the meats too, right? Again, I don't typically care for that side, but that's where we are. I think you're going to see, probably some pretty good bottoming action here. I mean, feeders actually did reverse yesterday. Okay. But I think that, again, that move was a little bit too parabolic. I would expect actually a pullback. I think you get a better chance to step in if you're patient enough to wait for it. But I think they look pretty good in held support. Live cattle or fat cattle don't look very good. Okay. They've had a little bit of a V-shaped recovery. And what you've really seen over the last few days is both fats and feeders come and fill an old gap. Okay. So now we'll see what they're really going to do. Now, we did think that they were going to find a bottom. And again, hopefully, we'll catch it. Again, we are going to reverse on Tuesday on the feeder cattle. So we'll see what that looks like. And hogs, look, they still look bad. Okay. And again, eventually they'll find a bottom. Eventually all markets find their levels. Okay. And all they're trying to find out is where will buyers and sellers meet. Okay. That's really what it always comes down to. Where will buyers and sellers meet? But for now, we look at the trends, and I gave you our position so you know which direction we have. We go in the direction of least resistance. And for now, in equities, that path is higher. Okay. Now, again, could it be a little action this week? Maybe. Short week. I mean, you could have something. Again, it's always interesting. Friday's close was extremely interesting with a big charge rally late. Very unusual into a market loaded with news, okay, into a market with a virus, coronavirus out there, okay, going into a 3-day weekend. But sure enough, there they were charging forward. So expect the new highs to continue. I'm wondering if we're not going anywhere until the Russell makes a new high. Now, the Russell is getting now much closer to new highs, but it has never once made a new high along with the other indexes. So we'll see what we look from here. But again, my best advice to you is if you trade, great, know your exit. And if you want to hold a position, this is not time to say, okay, well, I'm going to take a short position and hold it, okay? Because you could very well see, I suspect Dow 30,000 is coming, okay? Now, all that being said, don't be surprised if we see a 300 to 500 to 600 point sell-off either in a day or a couple of days, because that will happen when markets get so extended. They are very much bought up here. So a pullback would be perfectly natural, and that's what I would be actually looking for. But again, I'm not going to trade for it, but I'm not going to be surprised by it. And that's one thing we want you to also remember. You should never be surprised, okay, about what happens in markets. Markets are legit, okay? They're straight up, one or the other. You can't maneuver the markets unless you have money to maneuver them, okay? And there's guys that try, and I wouldn't be surprised, my opinion on what I think Soros might do before the election, but you can't really manipulate them. They have to be driven by buyers and sellers. So again, for now, the buyers are still here. The markets are still going higher. And for us to say that they can no longer go higher would be, as they say, a fool's game, which is the same as trade the news, you lose. That's the way that I would see it. So let's see what happens this week. Again, obviously we'll give you updates. There will be no update tomorrow because, of course, the markets are closed, but Tuesday, Wednesday, and Thursday. So in the meantime, we're going to step out here for a break. This is Bubba's Bottom Line for Sunday, February the 16th, 2020. And we'll be back with my commentary after the break, right here in Bubba's Bottom Line. What's up, everybody? Okay, well, yesterday, farmers webinar with hedging and portfolio tracking and how to take care of the farm, you got to check it out. If you're a farmer producer, you got to check it out. I'm telling you. Okay. Look, again, it's free. So just go ahead and email me at bubba@bubbatrading.com. Certainly would love to see you check it out. And of course, at the end of the day, don't forget about our other webinars. Our equity portfolios have been doing great, made some new highs this week. Our futures portfolios have been doing great, made some new highs this week. And of course, our friends over at Tradier, our brokerage partner, got free commissions. Go check them out. I mean, again, you can get a link from me, you get 0 commissions. I mean, real 0, not that phony stuff that's 65 cents a contract, just no ticket charge. This is real free commissions. So you got to email me for a link. And of course, our friends over at CTG, okay, who handle a lot of our commodity stuff. Again, you needed a contact over there, just shoot me an email and I'll send you out their information. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with my commentary. Welcome back. It is Bubba's Bottom Line, Todd Bubba Horowitz. It is Sunday, February the 16th, 2020. And of course, every week I get pissed off about something. And of course, I hate this whole coverage on the coronavirus, but I really hate the media in general. Okay. And I never watch CNN, so I can't comment there. But, CNBC, obviously they're a little bit more left. Fox is a little bit more right. And I will say they both suck. Okay. They both only want to have on the people that are, la-di-da, the cheerleaders of the market. And I want you to remember one thing, okay? None of them trade their own money. They all are managing other people's money. So what else would they want the market to be but higher? But, I think that I'm sick and tired of not hearing opinions of others on those networks that is willing to say, what they really think instead of the pre-canned rah crap that is out there, because this is just how you trap the innocent investor who believes what these people say because they are on TV, and who believes that there's never going to be a problem, okay? Who believes in chasing the risk assets. And to me, I think that's a sad state when, especially with the flow of information we have and the things you can do on your own to look up things, that you believe everything that some dope says on one of the networks, okay? Now, again, I know them all. I mean, I do work for both of them, okay? But again, they have me, when the markets are going up, they have me on less because I say, you got to be careful here. But of course, you also know I always say that you always want to be invested because if you're hedged, it doesn't matter, which is exactly what we are. But at the end of the day, I say what I really think, and many don't, which is there are many times over the years that I had to turn down spots because I wouldn't say what they wanted me to say. So quite frankly, I'm sick and tired of it. I mean, I don't watch it much to begin with, but I'll be watching it less and less because it's getting worse and worse with this soupy, syrupy drool crap. Okay. End of the day, this market will have an ugly ending. And I hope that all of you are prepared. And that doesn't mean get out today. That doesn't mean sell. That doesn't mean get short. It means just know you're prepared and know emotionally and mentally you're ready to make the next step and don't get caught up in the hype that we see. This is Bubba's Bottom Line. Todd Bubba Horowitz. Have a great weekend, everybody. Always a pleasure to be with you. And of course, if you have any questions, you can always email me at bubba@bubbatrading.com. And again, we'll see you back here on Tuesday with a Bubba's Day update. And of course, every Sunday with Bubba's Bottom Line. Have a great weekend, everybody. Thanks so much. See you later.